Investors called a little bit of a high anxiety with some turbulence. You mix those two together, and investors are waving the caution flag, according to our readers. And as you said, we've been surveying them since really before the pandemic began. This is the first time back besides April of 2020 when they felt really cautious. So we have about 45% of our readers who are somewhat to extremely worried about the stock market right now. 34% are expecting a significant drop in the next 6 months. That's up 10 percentage points since the last time we surveyed them in August. 25% say they're investing less now than they were back in May, and only 15% say they're investing more. We have a lot of folks moving to cash as well.
Caleb, that's interesting. What do you think is behind this investor anxiety? Is it the Federal Reserve, the prospect of higher interest rates, the supply chain issues that many companies, including Procter & Gamble and the travel companies, are referencing as of late?
Yeah, it's the supply chain issues, and I found that interesting that it was the overwhelming response, about 53% of our readers citing the supply chain concerns as the number one reason they're worried about the market falling off in the next few months here. About 43% are worried about more government spending. They may or may not get that, but government spending, usually good for stocks. 41% cited inflation, but only 29% citing COVID. So investors, our readers, at least, are a little beyond that, thinking about what could happen to bring down their returns, and they think it's the supply chain because they're hearing it over and over again.
If market participants are becoming more worried about the trajectory of this market, where we go from here, how do you explain the recent rebound in the S&P 500, now just 1% away from a record high?
Yeah, a little bit of a melt up, but also some good news in the last week or so. You've got the travel restrictions being dropped here in the United States, and that we're going to be allowing visitors in November. You have the FDA panel recommending the approval of additional vaccines. You have that kind of good news, but you still have the disconnects in the labor market. That said, it's the big money that moves markets. Our readers, our individual investors, pretty active investors, they've kind of stuck with it. And that said, they've seen this market rally up in the last week as well. So there's a little bit of confusion about which direction it's going, but I think the fact that so many think that we're expecting a market drop in the next 6 months, that could weigh on sentiment going forward.
Is sentiment around Bitcoin changing as of late, given the recent surge we've seen now at 64,000?
Yeah, absolutely. We ask our readers every time we survey them where the biggest bubbles are, and the biggest bubbles in their mind are in crypto and in the U.S. housing market. Of course, this was, we finished the survey Thursday of last week. Bitcoin shot up about 6-7% since then, still going, obviously, with the approval of the Bitcoin futures. But they think that Bitcoin and the U.S. housing market are the biggest bubbles. Next is stocks at 32%, 20% say NFTs, but only 8% said commodities. Commodities is where a lot of bubbles are right now. That affects, obviously, pricing. That affects inflation. So it's interesting that they picked crypto and the housing market. Both, you could argue, might be in a little bit of bubble territory.
So this survey suggests to you that investors see oil prices moving lower from here, not going higher.
Well, they felt that they didn't expect the bubble to be in the commodity area, but also I don't think they're expecting $100 oil. These are investors who really favor stocks, especially the big blue chips, the big dividend-paying stocks. So their concerns are really about what happens if we can't get goods through the supply chain more than they are about if we get $90 oil, $100 oil. But they are concerned, more concerned than they've been in months.